Warren Buffett's 18 Tips on Investing, a Blueprint for Financial Success. We have something unique for you today. We'll go deep into the knowledge of Warren Buffett, one of the era's most successful investors. We'll look at his 18 excellent investment recommendations in this video, which will assist you in navigating the complicated financial world and increasing your money. Thus, let's begin. Tip number 1. Patience is a virtue. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." Patience is crucial when it comes to investing. It allows you to weather short-term fluctuations and focus on long-term growth. Tip number 2. Think long-term. Buffett's second tip is to think long-term. He believes in buying great companies and holding onto them indefinitely. As he famously quipped, "Our favorite holding period is forever." This approach ensures that you benefit from compounding returns over time. Tip number 3. Risk management. Warren Buffett prioritizes risk management above all else. His rule is simple. Rule number 1, never lose money. Rule number 2, never forget rule number 1. By diligently assessing risk and protecting your capital, you can avoid catastrophic losses and preserve your wealth. Tip number 4, value investing. Warren Buffett is renowned for his value investing strategy. He seeks companies that are undervalued relative to their intrinsic worth. By identifying these opportunities, you can acquire stocks at a bargain and benefit from their future growth potential. Tip number 5. Understand what you invest in. Buffett stresses the need of carefully researching the companies you invest in. You may make well-informed investment selections based on sound fundamentals by carefully examining business financials, industry trends, and competitive advantages. Tip number 6. Stay within your circle of competence. Investors should focus on their areas of competence, according to Buffett. He is credited as saying, "Invest in what you know. You may improve your judgment and reduce the likelihood of making uninformed selections by concentrating on the sectors and businesses you are familiar with." Tip number 7. Embrace contrarian thinking. Buffett promotes thinking beyond the box. He counsels investors to be wary of market trends rather than go with the flow and look for possibilities where others are hesitant to go. Going against the flow might help you uncover inexpensive items that others might have missed. Tip number 8. Patiently capitalize on fear and greed. Buffett thinks that market turbulence brought on by greed and anxiety creates opportunity. He views stock declines caused by anxiety as an opportunity to purchase reputable firms at a bargain. Conversely, he counsels prudence and patience when greed causes prices to soar. Tip number 9. Don't try to time the market. Buffett advises staying away from market timing. He thinks it is useless to try to foresee short-term price changes. As an alternative, he advises adopting a buy-and-hold strategy, which will allow time and the market's long-term rising trend to work to your advantage. Tip number 10. Avoid unnecessary fees. Buffett advises investors to be mindful of fees and expenses. High management fees and transaction costs can significantly erode your returns over time. By seeking low-cost investment vehicles, such as index funds, you can minimize fees and maximize your long-term gains. Tip number 11. Stay humble and continuously learn. Buffett's advice extends beyond investing. He emphasizes the importance of continuous learning and humility. By staying curious, reading extensively, and acknowledging that you don't know everything, you can adapt to changing market conditions and make better investment decisions. Tip number 12. Surround yourself with the right people. Buffett understands the value of surrounding himself with knowledgeable and trustworthy individuals. He advises investors to build a network of mentors, advisors, and like-minded individuals who can provide valuable insights and guidance along your investment journey. Tip number 13. Be patient in building wealth. Buffett's success did not happen overnight. He believes in the power of compounding returns and advises investors to be patient in building wealth. It's the constant, long-term approach that ultimately leads to significant financial growth. Tip number 14. Focus on intrinsic value. Buffett emphasizes the importance of assessing a company's intrinsic value rather than solely relying on its stock price. By estimating the true worth of a business, you can make investment decisions that align with its long-term potential. Tip number 15. Be fearful when others are greedy. Buffett's mantra is to be fearful when others are greedy. In times of market exuberance, he advises caution and careful evaluation of investment opportunities. By avoiding the herd mentality, you can protect yourself from speculative bubbles and potential losses. Tip number 16. Think like a business owner. Buffett encourages investors to think like business owners. By understanding the economics, competitive advantages, and management of a company, you can make more informed decisions and invest in businesses with sustainable long-term prospects. Tip number 17. Avoid emotional decision-making. Buffett urges investors to separate emotions from investment decisions. Emotional reactions to market fluctuations can lead to irrational choices. By maintaining a disciplined approach based on research and analysis, you can make rational investment decisions. Tip number 18. Be optimistic about the future. Buffett is renowned for his optimistic outlook on the future. Despite market downturns and economic challenges, he remains confident. Business tycoon, investor, and philanthropist Warren Buffett, sometimes known as the Oracle of Omaha, is an American. Buffett, who was born in Omaha, Nebraska on August 30th, 1930, has risen to prominence in the financial industry. Many aspiring investors and business owners find inspiration in him because of his great investing skills, extraordinary riches, and dedication to giving. Buffett's career in investing began when he was a young man. He showed a strong interest in entrepreneurship when he was young, starting with side hustles like delivering newspapers and selling Coca-Cola bottles. In 1956, Buffett Partnership Limited, which later served as the basis for his conglomerate Berkshire Hathaway, was established thanks to his entrepreneurial energy. Buffett's investment philosophy centers around value investing, a strategy pioneered by Benjamin Graham. He seeks to identify undervalued companies with solid fundamentals and long-term growth potential. His approach involves careful analysis of financial statements, market trends, and competitive advantages. Buffett is known for his patience, often holding onto investments for years, allowing them to compound in value. Throughout his career, Buffett has made several notable investments that have propelled him to immense wealth. Some of his most famous acquisitions include Coca-Cola, American Express, and more recently, his significant stake in Apple. His disciplined approach to investing, combined with his ability to identify exceptional businesses, has earned him a reputation as one of the most successful investors of all time. Beyond his investment prowess, Buffett is admired for his simplicity and frugality. He famously lives in the same house he purchased in 1958 and drives a modest car. His down-to-earth attitude has resonated with many as it underscores the importance of focusing on intrinsic value rather than material possessions. Buffett's dedication to philanthropy is another outstanding component of his legacy. He committed in 2006 to giving away 99% of his wealth to good deeds, participating principally through the Bill and Melinda Gates Foundation. Other billionaires have been moved by this kind deed and have pledged to do the same by joining the Giving Pledge and giving the bulk of their money to charity. Buffett's charitable activities are consistent with his viewpoint on the value of volunteering and making a difference in society. He understands that acquiring riches entails a duty to put it to use for the benefit of society. His emphasis on healthcare, education, and poverty eradication has significantly improved the lives of numerous people all over the world. Buffett is renowned for his direct and perceptive statements in addition to his expertise in investing and charity. Investors anxiously anticipate his early letters to Berkshire Hathaway stockholders as they look to him for advice and insight. Rule number 1. Never lose money is a line from his well-known adage. Both new and seasoned investors may learn from Warren Buffett's counsel, which ranges from his maxim, rule number 2, never forget rule number 1, to the necessity of being frightened when others are greedy and greedy when others are scared. The influence of Warren Buffett goes well beyond the world of business. His accomplishments and way of life serve as an example of the value of careful money management, long-term planning, and philanthropy. His success story demonstrates how people from various walks of life may be inspired by it. Future generations of investors continue to be inspired by the Oracle of Omaha as he approaches his 100th birthday, serving as a constant reminder that wealth is more than simply a sign of financial success. It's also a chance to have an impact on the world. The world has been forever changed by Warren Buffett's contributions to business, philanthropy, and humanity, elevating him to the status of one of the most significant personalities in contemporary history. The famed businessman and CEO of Berkshire Hathaway, Warren Buffett, has created an empire of investments that has attracted the interest of the financial community. In this script, we'll look at why buying Warren Buffett's firm stock would be a smart investment and might help investors realize a sizable profit. Let's get going. The amazing track record of success of Warren Buffett's business is one of the most convincing arguments for investing in his stock. Buffett has continually proven his skill as an investor and capacity to produce excellent returns for shareholders over the years. For investors looking for long-term capital growth, Berkshire Hathaway has established itself as a symbol of stability and expansion. Investors get access to a diverse portfolio of companies by purchasing Warren Buffett's company shares. Among the many businesses that Berkshire Hathaway owns are ones in the insurance, utility, manufacturing, and consumer products industries. By distributing assets across several industries, this diversification reduces susceptibility to sector-specific downturns while boosting the possibility of assessing growth opportunities. Warren Buffett's investment philosophy is anchored in long-term thinking, and this mindset permeates Berkshire Hathaway's strategies. By investing in Warren Buffett's company shares, you align yourself with a management team that focuses on the long-term success of its investments. This patient approach allows businesses to weather short-term volatility and capitalize on sustainable growth opportunities, potentially generating substantial returns for shareholders over time. Transparency and strong corporate governance are vital for successful investing, and Berkshire Hathaway consistently upholds these principles. Buffett and his team prioritize open communication with shareholders, providing comprehensive annual reports and regular updates on the company's financial performance. This commitment to transparency enhances investor trust and confidence, allowing shareholders to make informed decisions based on accurate and reliable information. Investing in Warren Buffett's company shares allows you to align yourself with his renowned investment philosophy. Buffett's approach is grounded in value investing, seeking companies with solid fundamentals and attractive valuations. By investing alongside Buffett, you gain exposure to his time-tested investment strategies, benefiting from his extensive knowledge and experience in the market. The Berkshire Hathaway brand and reputation are strong assets for investors. Warren Buffett's name is synonymous with successful investing, and the association with his company can positively impact the value of Berkshire Hathaway shares. The company's reputation for stable growth and prudent capital allocation has earned the trust of investors worldwide, making it an attractive investment opportunity. Warren Buffett's company shares, particularly those of Berkshire Hathaway, offers investors the potential to unlock substantial value. With a proven track record of success, access to a diversified portfolio, a long-term investment.